Evening, traders. So it's been a couple of days since we spoke. I spoke to you last on Thursday, and we're wondering how the Trump press conference was going to work out. Now, on Thursday, dollar yen was beginning to rally, had that nice rally, and was sort of sitting pretty at around about the 1460 level. Now, we broke 115, stayed above it for a little bit. But ultimately, Trump's speech was underwhelming, and the Trump rally has not been restarted. So this has led to some risk off in the Asian session, and this led through to the European session. Dollar yen's been sold back, not all the way to this 112.50 level, but fairly far so far. 113.20, probably going lower. Now the reason why we're probably going lower is that there's not much reason here to be long the US dollar in this pullback right now. I mean, the big chance was that Trump sort of rally. I think we're going to have to wait for a little bit more of a catalyst to get that recharge on the US dollar, and it's probably something like an NFP or Yellen's speech again. Yellen started the last rally, but the general disappointment seems to be feeding into not so much that the US dollar is not going to be strong, but it's not going to be as strong as we'd priced in, and so some of that Trump premium has been pulled out, and I think you're going to get that back very, very quickly. So my default case is that we go into a bit of range trading. Dollar supported on fundamentals, and the other pairs are supported on a bit of sentiment. So sentiment is actually the most dangerous one here, because the sentiment is, in terms of the stock market, we haven't really had a correction since that big rally. We've had some consolidation, but a lot of this rally is also Trump premium as well. So if that's taken out in the FX market, and you've seen that in the US dollar, perhaps the stock market's due for a little bit of a correction too. And in that scenario, the US dollar will be sold mainly because the dollar yen is sort of connected there, and the dollar yen. So in this world, in the last couple of months anyway, risk off is actually dollar off, and you'd get euro rally, and you'd get Aussie probably mixed. Euro Aussie would, the sort of environment where you're waiting for this Euro Aussie to bounce back is a risk off environment, and that's really where the sharp buying would happen. Okay, so yeah, I'm a little bit cautious here. I'm a dollar yen buyer. I had those two dollar yen positions. Didn't make anything out of it because the market reversed. But I've gone into a short DAX position. Do a little maintenance on that right now. I'll close that out just because it's really, we haven't got confirmation from the US traders that they're on board with this stock market correction yet. So little preemptive to get involved there. So I don't mind risk off. I'm prepared for that, and I'm prepared for dollar yen to have another leg lower to the big level, which is 111.50. And 111.50 is that big fib level, but traders are talking about it enough that I think it's going to come into focus. It's around 111.55 from what I remember last time I checked it. So that's not that far away. I mean, a couple of days of stock market selling will get down there easily, but that also puts the euro back above 108. So those of you who are ready to sell the euro, perhaps we just wait, right? The ECB didn't give you too much to go on. It's grinding, its dips have been bought up. I mean, the chart is looking pretty nice here. Really, there's nothing stopping it too much on the top side here. I wouldn't be selling just yet. I think the US sell-off can, I mean, it's not so much the trend's going to change against the US dollar, but it can still move considerably further against it. And until we get that fundamental news headlines that are really driving sort of the US dollar, until we get some NFP or some everyone focused on when the Fed's going to raise rates next, or you get the US yields rising. US yields had dropped in Asia. Let me check them now. Rising again. I don't think you can get a sustainable US dollar rally. So I would caution on the sell of the euro too. broke that 107.20 quite easily today. Let's see what happens on the retest though. And the pound, I mean, reading into what the pound did, Friday we had some terrible data out from the UK. Market stabilized above previous lows, was caught up by the US dollar weakness, and broke out to fresh highs and recovery highs. So this is like, I mean, when the market does not make new lows on weak data, when the market is, you know, going higher on good news, but only small pullbacks on bad news, you have to read that as bullish, especially if the market's had a big pullback. That's a very big clue in the market that the trend is sort of changing, that the bulls are in control. So I would definitely be very careful about selling any pound at all. You know, I'm talking like, I'm more inclined to believe we're going to 127 again than we're going back to 122. Now, obviously, this is very fluid in the fact that there's so many headlines coming out about Brexit. PM May is meeting with Trump on Friday. Now, that could be the cause of huge headlines. I mean, free trade agreement agreed in principle between the UK and the US. How much is that worth? You know, a fair bit, right? In terms of a beaten down UK is going to be destroyed in Brexit sort of mode that the market's coming from, you know, some sort of agreement in principle to have a free trade agreement. You know, I think there's more risk of good news than bad news out of that meeting. A lot of goodwill between Trump and Brexit in particular. Not so much May, but you know, he loves the anti-status quo, that's for sure. Sure if NFX is being facetious or not. Might have to hang him up. Yeah, that is music from Pearl Harbor Gitman. And Aussie dollar, I think, is going to break higher. The path of least resistance is to the top side. I feel that you know, look, I'm a US dollar bull, and I've got a, you know, I'm close to capitulation here. I'm definitely not buying the US dollar right now. I'm surprised it's up here. I sort of understand it now, but really, I mean, it's, you know, if you believe dollar yen's going lower, you believe euro's going higher, as long as stocks don't fall too quickly, Aussie will do okay. At some point of falling in stocks, if they overtake and they get risk aversion, then Aussie dollar will be dragged down, mainly because of Aussie yen selling and euro Aussie buying. But it's been a while since we've seen that, so just remember that that's a really big part of the Aussie's dynamic. We haven't had a stock market heavy sell-off for a while though, so it's been a while since you probably felt that sort of risk-off mood in the Aussie. Aussie falls a lot quicker than it rises. You know, Aussie's the king of plunging when it happens. And the same goes with the Kiwi dollar. The Kiwi dollar will be trapped into that same sort of dynamic. Now, yeah, that's how I'll play it this week, right? I'm really interested to see if the US can hold its stock market. If it can, then maybe we can start to cautiously get bullish on the US dollar earlier than expected. If the stock market starts to fall here, it's hard to know how much we're going to fall. You know, it's pretty easy to see a 400-500 point pullback here without really too much effort at all. And how that affects the dollar yen and what sort of move we get on that really will direct how far we go back, how high we go in the other pairs. So today is pretty interesting. This week's very interesting to see if the market's disappointment with Trump grows and if something more evolves out of it. Not just disappointment, but fear that the markets are overpriced currently in the stocks. And that's you know, an emotional market. The stocks, this is really stable in the stocks. Like, if you told me that on December the 10th that we would be in a 300 point range going into Trump for what, nearly 6 weeks now, I mean, that's crazy tight. Crazy tight. We're going to have a big pullback, or we're going to have a breakout above 20,000. One of those two things is going to happen, and it'll probably lead to another 500 point move. The market likes to bust out after that. Very unlikely that we trundle along in that same 300-point range here. So, given what the Trump's got so far, I suspect it's to the downside. US started this rally, right? US controlled this rally. US session, US traders, US investors will decide its fate. It's very hard for us in Asian session to dictate how the Americans are going to trade this. And Trump may save, he may come out with a focus on business and infrastructure plan, a tax plan, a way to get the offshore money back to America, that sort of stuff. More talk about this, less Twitter about celebrities and fake news. That's what will get the market pro US dollar again, I believe. But he's not doing a good job in the last couple of weeks. He's really getting a little bit belligerent. I believe it's and at some point the market will have enough of his shit, right? If he can't just settle it right down, I think it's closer to the let's not take this guy seriously, punish his actions rather than giving him the benefit of the doubt. Alright, we're giving him a lot of the benefit of the doubt, but he needs to settle down. He needs to settle down, focus on being president. I don't want to have to change my outlook for the markets, right? Based upon his madness. And it's so much harder to trade an erratic Trump than a stable Trump. Right? As a trader here, I don't really want to be worried about his tweets. I don't really want to be worried about his comments, to different leaders. I just want to be able to have a steady sort of hand over there, even if it is aggressively, fiscally expansionary. I just don't want to have to, worry about him too much. Now it's getting to the point where we're really worried that he hasn't got what it takes to get some of this stuff through. I'm starting to worry if he's sane or not, right? Like, he's the president. He has to stop worrying about some small stuff. If you've been tracking his Twitter for the last week, you know what I'm talking about. So yeah, that's my view on Trump. I'm not surprised, but I'm just getting weary. Now, what are we focusing on this week? Well, apart from Trump, there's a fair bit coming out. Those of you who've been following the UK closely, you do have the High Court decision. Shouldn't be too much of a big deal. I do believe that Prime Minister May's already ceded that the government's going to have a vote on it. So it doesn't really matter, right? Since you don't need the High Court to tell the government that they can just drop out without a vote. Aussie CPI is pretty important. There's a bank holiday in Thursday for Australia Day. Probably won't be streaming Thursday. I'll probably stream on Friday this week because of that. And then you start to get into a little bit of crazy time in Asia anyway, with the Chinese New Year and the US GDP. Alright, US GDP. This is the first reading of the Q4. This will be pretty important, actually. That's probably the most important event for the week. So the last week of the month is usually pretty quiet, but this week could be a bit more than usual, given the market's pretty close to the rollover on the Dow, and it's the first week of the presidency, so you might have a little bit more volatility than you usually expect. Let's have a look at some research, guys. Genki 7. Look, US dollar is a safe haven a lot, right? But I suspect, given the current market, the US dollar's be closely linked to the Trump rally. So if its stock market's pulling back because of an unwind of the Trump rally, I think the US dollar gets sold on that. if at some point the market goes really risk off from especially some event outside of America, could be China issues or Netherlands vote issues, then yeah, I mean, US dollar will go back to being strong. But if you're talking straight up dollar yen, high or low, then your stocks are down, dollar yen's down. Stocks are up, dollar yen up. Euro should be pretty similar to that as well. Stocks down, euro up. The other pairs become a bit more complicated, pound and in the Aussie. Yeah, and this is, I'm talking about small moves, not big moves. And I'm really talking about the unwind of the Trump trade more than anything, Genki. Yeah, I think you're right though. US dollar's got a pretty strong outlook. The biggest threat to the US dollar outlook is not Trump. It's the Fed pulling back its rate hike expectations for the year, or other countries turning hawkish. That's the biggest threat. Other countries, mainly Japan and Europe, and Australia. You know, at the moment they're expected to do nothing this year. Everyone's expected to do nothing except for the ECB to taper a little bit maybe at the end of the year. And Australia's expected to do nothing, Japan's expected to do nothing. Britain, if anything, have got to cut rates. So, you know, this is, there's a lot of room for them to get more hawkish. There's a lot of room for the US to get more dovish. Very little room for the US to get more hawkish than 3 rate hikes, and very little room for ECB and Japan to get more dovish in this current market. So yeah, there's a lot of risks. If you're talking out as a currency forecaster, you can see euro at 120, you can see dollar yen at 100, no problem. It's definitely possible. At a higher possibility than currently I think people would expect to. That's what makes long-term forecasting so hard on FX. The way the market unravels, the way the market, rolls forward, it's fairly unpredictable. Alright, so let's have a look at this 10-year yield again. So we've been looking at this every day. Now if I'm saying here that the US yield has bounced a little bit in the last 2 hours, you should be telling me dollar yen's rallied in the last 2 hours. That's what we've been teaching, yeah? What moves dollar yen? US yields. So for the last 2 hours we have been rallying, and in fact the dollar yen is mispriced on the US yields given what we saw last week. This is actually well under where it would be. It's about 100 points under where it was last time it was at this level. Alright, now the key level is 2.5. 100% guarantee we break 2.5, US dollar rallies back on. Regardless of what's going on in Trump world, regardless of what's going on in the stock market, that's the case, yeah? So yeah, this is interesting. This is messing out a little bit with your US dollar sell-off. That's for sure. And that's really important in the US session, guys. Check in the US session what's going on here. If you're selling again and we get below 2.4, then expect the US dollar to be well lower than it is now. And that's the dog that's wagging the FX tail. It's the prime mover. It's the first one. It's not the FX moving the US yields, it's a bond market. It's US yields moving the FX. 90% sure of that. That's an unprovable statement I made though, but I'm 90% sure of that. Smarter people than me have told me that. Okay, let's have a little look at some of this research. Enough yabbering. It's a bit of a dissertation today. I'm pretty disappointed in the whole Trump speech. That was not inspiring stuff. will tell the truth though, I did not get up for it. So the trigger words that we're looking for is fiscal policy, tax cuts, infrastructure spending, right? We need to hear more of that. Tax cuts I think is pretty key, so he says infrastructure spending enough. It's not the first time I've read this in one of the reports too. Polls are shifting towards the left in France. That has to be positive for the euro. The whole Marine Le Pen and Brexit is just not on the cards if left wing win. Should we try and find that, Cartman?
It back to you. We are transferring power from Washington, D.C. and giving it back to you, the people.
We take Gotham from the corrupt, and we give it back to you, the people.
Yeah, it's pretty close. Pretty close. So some of the stuff that you can get from banks include their desk notes, spot desk notes. I always find them a little bit more interesting to read than the FX analysts from banks. So these are the traders and the sales who write these updates. Now, almost definitely it's not the main trader writing these, but I'm pretty sure that the underlings will pick up a fair bit of what's important. Today, the one we're looking at is from UBS. So this guy's buying dips in the euro, targeting 108, 108.33. Pound. Yeah, my feelings exactly. I think it's a matter of time for this to trade higher. I don't mind buying dips in the pound too. Just keep an eye on this US yields though, you know, it's going to be harder. But the pound is actually not a bad trade against the euro. So one of the trades that we've been doing, if I really believe the pound's going up, a bit worried about the US dollar, then the best trade to do is to sell some euro pound, yeah? Makes sense? What happened to the DAX while we're giving a little speech there? Golly gosh. Lucky we got out of that. Huh. Play a little here. Going to play a little pound. Pull back dollar yen, yeah. Aussie dollar. This one I'm a bit interested in. Selling Aussie. I want to sell Aussie a lot. It's been so hard the last couple of weeks. Did have a good run though. It will go down in stock market selling, down in US dollar strength, but weaker if the US dollar can somehow manage to sell off while stocks somehow remain strong. That would be the Goldilocks sort of rally that it's having. I'm not trading this at the moment. The stocks are pretty hard to sell. I know that, we've been trying to sell them here, but we've been talking about the potential for the sell-off, sorry. And I sold a little bit of DAX today, took profit, but I don't know. I'll let someone else sell and react if I wake up tomorrow morning the market's below 19.7. Then I'll have something to do with my dollar yen, something to do with my Aussies, and my pounds. But right now it's really hard to trade against it. The trade I just took then was short euro pound and long pound yen, for those who missed it. Let's see how we're running, Gabby. So let's see. I think we're going to have some pretty good, short-term rally in the pound just generally. I think that euro pound will do well this week. The risk will be Trump. So say we're down to 85, and we're coming into Trump and May's little speech. Probably hold it into that, meeting, and see if there's some headlines out there that the market can grab a hold of, help the pound continue to rally. In terms of stop, I'd be surprised if we got back to 87. So yeah, this could really be, a move all the way down towards 83, 84. If the market starts to feel that the bottom is in on the pound, it can get pretty ruthless. And that big candle, we talked about the big candles in general. That's what you see at the bottom of every major sell-off. So let's see. Definitely short term I'll be playing on the pound long side. It's actually talking about it in the FXWW room as well. It's Barclays Trade of the Week. If I can find that, I'll post it, but I can't seem to see it now. I'm stealing it. You want to know what it looks like inside that trading room that I'm always posting stuff from? So this is where they get the research from. So they're talking about it down here. PM's speech was more conciliatory than expected, blah blah blah, reduced Euro duck selection, pair funds at performance. I'm just short more about the I'm short more on the reasoning that the pound's got that so much upside compared to the euro. But yeah, no, they've got a little bit more tactical reason there to be short euro pound. And I better give some sort of link to that FXW. I feel bad every time I talk about it and I don't write a little link. So inside the chat room there, that's the link to that. Look, it's very dry. It's not a educational chat room at all. You need to know what's going on, but it's got bank research in there. Around about $60 a month, I believe. $50 a month to get access to the bank documents. So let's have a look at, this is Credit Suisse's technicals. We look at these every now and again, just check their dailies. They're not too bad, and because you look at the same stuff a lot, it's easier to pick up on what they're putting down. So we look at this every few days in this stream. I was going to call it a webinar. It's not really a webinar. So that 108.20, 108.28, they're talking about that being a fib level. That's also the 100 moving average as well. Dollar yen, they're looking at the 112.56. It's already broken that today. This must have been written on this morning, or Friday actually. Dollar Swiss at 100, it's pretty interesting. I think the stops will be run below it, but it's still pretty interesting. This cluster of resistance on the Aussie must be like a mountain to anyone thinking that we're going much higher than 77.50, 78. You know, this held literally 10 attempts last year. Euro pound. Yeah, no reason we can't get all the way down to 200 day here. Give ourselves a little bit of a rally. Alright, so dollar yen should be lifting off with this. So, I mean, look, it may not be as simple as we first thought, this whole US dollar sell-off, but I suspect this is not going to get too far, that disappointment is real. But you never know, if the Dow makes a run at 20,000 this week, then this whole dynamic changes. And we by chance get back above this resistance on the dollar yen from last week, then we have to be talking US dollar bulls. If the 10-year gets above 2.5, we have to be talking US dollar bulls. But I suspect that the path of least resistance is lower right now, so we'll see how it plays out. This is the one. This is like the first dollar yen dip I didn't buy, so we'll see how it plays out. You can get it from the room, Gabarin. The link I put in there above your comment. Alright guys, I'll be back tomorrow. Good luck with your trading. Trade safe. I will be here at 9 GMT. I'll be streaming Monday, Tuesday, Wednesday and Friday this week, and taking Australia Day on Thursday off. Alright, thanks guys.